perspective on various stocks and sectors. Let's go across and get you a quick perspective on what's really happening in Europe right now. Bundeep Rangar, who's the chairman of IndusView, joins us from our London studios. Bundeep, thanks very much for taking out the time. We're seeing a bit of a correction in the Indian markets. Are you taking it as an opportunity to step into the markets? What's your position on India?
Well, I guess that's a temporary blip, right? I mean, they're still trading close to 20 times PE ratio, and whether you look at it on a PE ratio basis or book value basis or a return on equity basis, Indian markets are highly priced, but I still think that there's room for them to grow more. So it depends on what your horizon is. Is it a short-term or a long-term view?
Right. Pradeep, technically speaking, if I can put it that way, we're finding support at some crucial levels. The market is refusing to go beyond that 6,000 level. It happened yesterday, in today's session as well. In the last few minutes, we've bounced back. So there is some key buying that is happening at lower levels in indexed heavyweights. How would you position yourself? Would it be heavyweights? Would it be large caps? Or how would you look at the Indian markets right now?
I guess you can look at it partly from a cap perspective, but also from a sector perspective. I'm much more inclined to look at it from a sector perspective because I think the overall market gets skewed by some significant one-off events such as the Coal India IPO, which I think has led to a lot of foreign institutional investment inflows into the country, and that's had an effect on the dollar rupee, and that's also had an effect on the overall stock market. So I like to stay a little bit away from just the overall cap size and look at sector specifics, and I've got some obviously sectors that are more attractive. Having said that, I do believe that the upturn you've seen in the last few hours is indicative that this was a slightly buying time because the overall India growth story remains strong. I mean, you got a 9% GDP growth, and the Asian economy is going to triple over the next decade compared to the U.S. economy that'll grow about 10-12% over the next decade. It's a long-term opportunity for investors, and that's why I said the real question here is what is your horizon? Are you looking at a 2-year view, a 6-year view, or a 5-year long-term view?
You've been monitoring the earnings here. What have you made of them, especially from the IT pack? What's the outlook and the exposure to the software industry?
So I believe the Q2 earnings were in some ways priced in by the market about 10 days ago when the anticipated earnings were looking positive. So in some ways I think the kind of growth, the rise in stock markets we had about a week ago was taking that into consideration, and by and large I think the markets met those expectations, which may explain why some of the industries like auto, and you talked about Bajaj Auto earlier, and certain other company reports have come in line with what expectations, and that might be a reason for the uptick in the last few hours. I guess the concern here is on an ongoing basis is how the rupee dollar rate is going to affect exports, because India's the trade deficit's widening, and the increase in the rupee versus the dollar in the last couple of weeks, I mean the last few months in fact, has been affecting exporters and might take some of that growth that you've seen in the Indian stock market, which is up 40% now in the past 12 months. So that's, I think, a little bit more of a concern rather than purely Q2 earnings, because export-led growth and earnings are hugely hit by currency fluctuations.
Would you look at any of the sectors which are, well, in a way regulated by the government, because some of these haven't run, but the prospects seem to be very great, but people are circumspect because, hey, the government could actually play spoil sport at some point of time, if not now, in the future. But are you looking at any of these spaces which look relatively risk-free?
Relatively risk-free, that's a good one, my friend. I wish that was the case, but I do look at a few industries that are regulated that I think are also good attractive buys. So to me, the banking industry remains a very strong force in India. If you look at the worldwide banking industry, the world's top banks have changed from being US and British to the top 3 now being Chinese. And I think if you look at where the next decade will go, the Indian banking industry has to grow and become a major force in the international scene. And banks remain relatively undervalued. If you look at their P multiples of 13 to 14 versus, say, non-banking financial companies, which are off sort of in the 20 to 25 range, and certainly top brokerage houses that trade at about 50. So if you look at it from a purely whether it's a price to earnings or book value, Indian banks are relatively inexpensive. And I think with the reforms happening in that sector, and you alluded to regulated sectors, and now the new licensing being granted, the new entrants from foreign markets coming into India, I believe the banking industry is certainly one to look forward to as a midterm growth story with robust fundamentals underpinning them.
Great. Bundeep, appreciate you taking the time out today and joining us. Many thanks. And have a profitable investment opportunity in India, I dare say. But take a break on this show and Chartbusters with Aisha Faridi.
Yes, indeed. And what a pickup that we've seen for the equity market.